Good day all. Ira Epstein of Linn and Associates with your metals market update for this Tuesday, April 23rd. It is a historic day, and I'll tell you why in a moment, but we're just after 3:19 p.m. Central Daylight Time. All-time high closes, NASDAQ and the S&P. In the cash markets, in the futures, you're right there. So what this market is getting are the earnings it needs from different companies. Remember what we said this week. We're going to have to wait and see. We've got more earnings coming. The big boys, a lot of them are yet to come out between tomorrow and Friday. So we're going to get a lot more information from there. But this market has been on a nonstop tear to the upside, and that tear has put pressure on the gold, which has made a new 6-month low or so by getting down to 1267.90. It's driving the dollar back to its highs, and it's put foreign currencies into a state of flux where if you're going to Europe, you're down to 112.76 on the futures, at least, under 113 in the cash markets for your euro currency. So it's a good time to go to Europe. As for inflation, where is it? Even bonds and notes aren't rallying right here. So interest rates are staying low. Employment is running. There's no inflation. If you were to tell somebody this in a college, they'd go, you're out of your mind. Yet this is what's going on. And you can see how gold has gone from 1329.20, and that time frame was February, March. We're down to 1269.50 as in low. Look at how this market's going. Remember, this is a weekly chart. This isn't quite the close of the market. I'm doing this, as I said, near 320. You'll see the settlement price come in at 4, but remember, the settlement's determined at 12:30 p.m. Central Daylight Time. When you look at a daily bar chart, is there any argument this market's been falling apart? And you can see the pattern is one of these peaks. Lower highs, lower lows is measured by the swing line study. Now, if you don't have our charting software, you'd be able to, you have to write your own study to do this. Those of you that have our charting software, this study's right there. So to break the bearish pattern, you'd have to get through right now 1281.90. And you can see that without today's action, these were the previous highs. I would have had yesterday this arrow probably way up here. Now, because you've gotten through those lows, it moves down automatically, and that's where you're at. In terms of moving averages, well, you've had a bearish crossover right here. We haven't talked too much about that, and that happened on Thursday. The idea of bearish or bullish crossovers is it adds thrust. If it's a bearish crossover, thrusting to the downside, bullish thrusting to the upside. Do they always work? Let me share with you what I've learned in charting. I don't know of anything that always works. I know things that work more times than not. Most of the time, but the word most means what? You've got to ask yourself that too. But the theory here is that the market will thrust to the downside. It didn't do it right away, but it certainly met that thrust today by making the new low. That's my point. When you take a look at Bollinger Bands, I'm going to back off from today. We had the bearish crossover. You didn't quite get down to a Bollinger Band, and you don't always have to. The idea is that the Bollinger Bands, you will trade within these black lines 95% of the time. And the first challenge of them, after it's been hit once, again, is that it offers some support. You don't just go sliding through it, and that's what it did today. You got right down to it, as you can see, and you're holding into that general area. Now, again, we're on the daily chart, so this is closer to the real action of the day, and as you can see, the low was 12, well, the Bollinger Band was 1269.90. We got to 1267.90, and now we bounced away about $4. That's the theory of it. The trend's still down. Even if you took out 1281.90, I'd look at layers of resistance between the 100-day and the 18-day average. In terms of momentum, it's changed itself. It's locked in bearish. Locked in means the word embedded. That occurs, in my opinion, and I'm the one that created this term, when the two lines that make up slow stochastic go under 20 or over 80 and go sideways for several days or more. It implies that on rallies in the market, you're still going to have willing sellers. It also, to me, implies that eventually when that red line bounces out of the 20 area, over it, it might lead to more short covering to get back to the key moving average of the 18-day, but it'll be a lower number than it is right now, just because when we close tonight, As you can see, the slope has been down of the last 18 days. You're going to lose one of these numbers back here and replace it with a lower number. In GLD, the popular ETF, how many days do we have sideways? Well, today's action, both numbers under 20, yesterday under 20, the day before, not the day before. So you embedded today. Today's the day you locked it in. So now the question is, how long does it stay in until it's lost? I say that the bears will still be selling. There's another thing going on here. You had a bearish crossover today where the 18-day average got under the green, the 100-day average of closes. So new bearish crossover there. The market that's staying under the Bollinger Band has been the mining stock GDX ETF. And as you can see, you've got now 3 days in a row under. I subtract each consecutive day under from the 5% Bollinger Band theory. And that tells me I have a 2% chance tomorrow, or a 98% chance I won't close under that band. That's not a reason to buy it. It's just a bounce. The trend is defined as down, lower highs, lower lows. Do we have an embedded reading here? Well, let's see. Both numbers today are under 20. They were both under 20 yesterday, not the day before. So I have an oversold market that is not given the same condition as the futures or this chart, GLD. Got it? The gold-silver ratio is seeing now a turn back in favor of gold gaining on silver. How do you say that, and how do I know that? This represents, these numbers here, how many ounces of silver it would take to buy an ounce of gold. And all I'm doing is I'm taking the June gold and dividing the silver into it to find out how many ounces I'd need. Eventually I'll move away from the May silver soon, but since you're not playing May silver, I think you should be in the July anyways. There's nothing wrong with taking the two nearby contracts and running them together. I've already taken you to the July silver. July silver today. I want to just show you my theory here. The market had, now if you look at it, tried a reversal yesterday. If it drops, my argument doesn't mean I'm right. This is what I teach in my charting course. The first challenge of a Bollinger Band, I look for the market to bounce away from. It got down to it and it turned back up. It got as low as 1477.50. The 1486.50, rather 1487.10 was the Bollinger Band. So you certainly came off those lows nearly 10 cents. And you're still pretty close. I don't know where the settlement price is in this market. But unlike the gold, you're not embedded. You're just plain oversold in this market. In copper, this is a market that is failed to reward anybody playing for the breakout to the upside via the trade deal going on with China, because copper would be one of the main beneficiaries according to many analysts. I'm not saying what I think. If China's economy picks up, if trade helps their economy, well, copper's one of the mainstays. It's one of the metals that they use. They're one of the largest users in the world, in fact. So you'd look at that. But every time we hear something from the White House, it's another 30 or 45 days out. We heard that today from Larry Kudlow. So you listen again to that, and the market didn't like what it was seeing, so it's backing off. I still would look, with just my theory, throw the name of the chart off, that the first challenge of a Bollinger Band often is where those that are short will cover. If you're long, those that get up to the band, I think they take some money off the table. In the platinum market, you retreated back to the 18-day average of closes after this bit of a rally. This is how you looked yesterday. The market was not trending. You had a lower low, higher high. It didn't quite make it yet to the Bollinger Band, and instead it retreated to what I call that line in the sand, which is the 18-day average of closes, where so often markets like to figure out what they're going to do next. Palladium did the same thing. Market got very close to hitting the Bollinger Band. It didn't hit it. It just missed it, and it pulled back to the 18-day average. Its pattern is one of a lower low and a higher high, not a trend. And the dollar index got up, as you can see, the other day to the Bollinger Band, pulled back under it, which is typical, challenging it again, and closed over it today. Now the question is, can it stay over that market, and how long? Is this a breakout pattern? The market will tell us. The trend is up. The market is entering right now, any reading over 70 in the slow stochastic, my definition, mine, is that you're in overbought territory, so I consider it overbought and over the Bollinger Band. So a bit of risk there for those that are long. Doesn't mean the trend isn't up. We talk technicals, fundamentals, option strategies, and future strategies in our Linn research. We cover all these different categories throughout the day. Now, there's a couple of cool things with our research. It's not just written. If you have our trade platforms, which you're entitled to use if you've not tried them before, we orally talk as well. David Hightower's on it, a whole host of people. We talk, our staff does, all these different markets to you. And if you miss what they're saying, it's not a problem because it's all recorded anyways. You just click on it, it'll play. How do you get access to the research? And if you want our trade platforms, either give us a call. You can go to our website. You'll see our free offerings right there on our homepage. You can click up here. If you're watching me on YouTube, it'll take you there as well. I'm Ira Epstein. You have a good day, and I'll talk to you tomorrow.